In the past few months, the Kiwi dollar has started to turn in exporters' favour, but they're not expecting it to stay that way. ASB's first dollar barometer shows most are expecting it to rise again, but they're also planning to do what they can to offset its impact. With us now is ASB's chief economist, Nick Tuffley. Good morning to you, Nick.
Morning.
So what is it exactly are they expecting here, that it's going to go back to its highs or just creep up a bit?
Well, most of the respondents in the survey expected the Kiwi will be heading up towards about 80 cents by March next year. So there's an expectation that whilst we've had this dip in the short term, it will be gradually moving back up to near those levels that we saw a little bit earlier on this year.
But they're not just going to sit idly by and wait for it to hurt their bottom line. What are they planning to do?
We asked quite a lot of questions about businesses' plans to hedge, and about 3/4 of businesses do intend to hedge their foreign exchange exposures at a 3-month horizon. So that's quite a fairly large proportion of businesses will do that. And one of the encouraging findings is that about 3/4 of businesses find that their hedging activities are successful as well. So people don't just have a pick on where they think the currency is going to go. They are importantly managing that risk of the currency, because as we know, it doesn't always quite go where you think it's going to go.
Is it surprising at all that they are successful at it? Because as you say, it's hard to pick where it's going to go. In fact, some economists talk about it being a mug's game, trying to pick where it's going to go.
I think that's exactly the reason for hedging. It is making sure that what you're doing is minimising the risk that adverse movements in the exchange rate can have on your business, and that's really what hedging is all about. It's not trying to actively pick where it's going to go, but making sure that your business is going to be insulated against those moves that are going to hit the bottom line in a way that you really don't want.
And those that aren't familiar with the term hedging, what are we talking about here?
Hedging is essentially managing your foreign exchange risk. So if you have forward orders that you know you're going to be getting, whether you're an exporter or an importer, it is locking in or providing some protection for the currency, so you either get some certainty about what your future exchange rate is going to be, or you provide some sort of protection against the adverse movements, but you still, say with options, benefit from the more beneficial movements.
Obviously, we've been talking for a long time now about the heights of the Kiwi. What sort of impact has it had on the investment intentions of the businesses that are affected by it?
Well, understandably, there was quite a split in how people viewed that. Firms that are heavily import-focused saw it as an opportunity. Obviously, it means that their market share domestically is likely to be stronger, so they have got a very firm, about 60% of exporters said that the exchange rate would make them lift their investment plans. Understandably, on the export side, a high exchange rate makes you less globally competitive, and we did see that the exchange rate was having quite an impact on exporters' plans to invest.
Thank you very much, Nick. That is Nick Tuffley, the chief economist at ASB.